All right, traders, happy Monday. Welcome to the AAA session. This is Chris Pulver, joined by my friend Tyson Clayton of Market Traders Institute. Let's go ahead and get started for today's AAA session. Tyson, say what's up to everybody out there.
Hey everyone, hopefully you're doing well. I'm not shaving until the Raiders win a Super Bowl. So
Oh boy,
yeah,
that's quite the
haven't seen
protest.
that in a long, long time.
Considering we just finished the season, so you're gonna have to wait at least a year, right? I can't wait to see
Yeah,
what that looks
I
like.
will. It's the Raiders, so we'll probably have to at least a decade or so.
All
But
right.
anyway, no. Hopefully everybody is doing well. Hopefully you had a great weekend. Watched the goats, the greatest of all time, solidify his fact that he's the greatest of all time. And yeah, a lot of stuff moving, a lot of things happening in the markets. It is full steam ahead, risk on, Chris. And what do we do? Do we just continue to plug our nose and buy? And we're going to have that conversation today.
Yeah, I think that's I mean, literally for 10 minutes as we were talking about, it's like I was telling Tyson that I did a video for my high octane traders last week, and the message was really like it was kind of tough love. I'm like, look, you guys want stock alerts and picks. It's like I can't in good conscience send out stock picks and alerts at 52-week highs at all-time highs. It's like that makes me so uncomfortable saying like this is a great pick. It's like because if you don't have a plan or an exit plan, it's like essentially you're buying highs and knowing that your better prices are so much lower. And so I mean, in fact, I will show. Let me bring up this little tidbit. If you can see this, everybody, this is a list from last week. I just want to scroll through this because there are too many to mention here. Okay, but take a look at this. These are stocks that hit 52-week highs last week on Thursday. So Tyson, if you're watching this at all, I mean, this is crazy. Like, I'm just going to scroll through the list and you can maybe pick out some, but we have so many stocks hitting 52-week highs. So, I mean, look, anything that people are buying right now is probably making them look like they're really smart, probably making them look like they're geniuses. And like this trading game is so easy, investing is so simple, and it is a great time to take advantage of it. It is a great time to be participating in stocks and in Forex and in cryptocurrencies. But the reality is, we have an environment right now that probably is giving people a false sense of confidence because eventually it's going to get more turbulent, it's going to get more volatile, and eventually it's not going to be this easy. But for right now, it's like, what is it when the sun's shining, make hay? Is that what the saying is? Is that about right? It's like it's a perfect environment right now just to be in and involved, and it's like traders, investors are just they're doing really well. It's a great time for it. I'm still not done scrolling through this list. This is ridiculous.
That's nuts. That's
Yeah.
not. The thing it's a difficult. It's easy. It's one of the easiest markets ever to make money in, but it's also difficult because sometimes you can know too much. You can get in your own way, and we know the party ends eventually, right? And we know that what we've went through and all this kind of stuff. And there's a ton of money out there in the supply. What I'm looking for I'm looking for, and what you just showed with the 52-week high list is I'm starting to see and trying to find those levels of euphoria
Hmm.
because that's what's going to crack this. When we get to a level of complacency and euphoria, and you start to hear everybody and their mom talk about, for example, this is literally the perfect example of euphoria. I walk into the gym the last couple weeks, and the people at the front desk, great people, they're smart. They're going to go off there and do some great things eventually. They're talking about how they're making a bunch of money in the stock market trading stocks.
Yeah. Yeah.
Again, I have nothing against them. I'm totally for them doing this and doing it well and making money, but it's becoming, the idea is it's so easy.
Right.
And we saw this two times in fairly recent history. We saw this in the dot-com bubble of the tech boom from 1999 through mid 2001 or so, or about 2000, 2001, when it became really, really easy. I knew that because that's when I started trading. That's when I first started buying, because I was like, man, it's so easy to make money. I'm just going to buy these great stocks. And I got in at the exact wrong time. We also saw that in 2008, 2009. It wasn't necessarily in the stock market, but it was so easy to bitch. You just buy a house and you mortgage it up and you leverage it, and then it's going to go up in value, and and you'll make money on it.
Hmm.
And it just became too easy. And now it's becoming easy. People are believing it's very easy,
Yeah.
and it's not. I'll tell you, I'm concerned, very concerned with, and this time might be different, a little different when it comes to cryptocurrencies and Bitcoin. because we are now starting to see a flood of new money that we didn't see before. However, I've got a bunch of people ask me, Tyson, it's now the time to buy. Should we buy now? Should we buy now? Well, I'm a Bitcoin is going to $1 million type of guy. However, we have about 8 years worth of history showing that it only spends so much time above its mining cost. And it always, every single time in history comes back to its mining cost. Now the question is, right now the mining cost is about 16, 17,000. Is the mining cost when it comes back down there, which I promise you, I guarantee it's going to, is it going to be 17,000 or is it going to be 25,000?
Right.
But I'll tell
Right.
you this, for it to get up to 40,000, so Bitcoin's at 43,000 right now. For the mining cost to be 43,000, it's going to take at least 1 year for it to reach that level. So that means that could Bitcoin go to 100,000, 150,000 and then crash
Right.
back down to 40,000? It could.
Right.
I just don't. My point is this: I would rather whether the mining cost is 17,000, 22,000, 30,000, 35,000, or even 40,000. I'd rather buy at the mining cost than buy right now.
Yeah, that's interesting because it was a conversation I had. I think it was last week or the week before. I think that we have to start the new year. It's like if traders missed out on cryptocurrencies last year, right? We saw the big rally from Bitcoin cracking 10K, in the summertime and starting to drift, and then getting a little aggressive run going through the holidays, and just it carried into new highs this year. Now we're starting to see a little bit more, social media influence. We have the Wall Street bets. We've got Elon Musk. He's talking about his big position in cryptocurrencies this weekend. Bitcoin's cracking new highs. But my thoughts were when Bitcoin came down to like 31,000. I told traders this. I was like, okay, if I had $0 in cryptos right now, and Bitcoin sitting at 30,000, what I don't want to do is I don't want to put in nothing, because my thoughts were if I at least had something in the game, having cryptos start a rally again, having Bitcoin go from low 30s all the way back up to, 40 plus. Now we're at 43, making some new highs. Will we stretch up to 50? I mean, at least it's a participation trade where now you're up 20%. If it does come back down, 30 is not a great spot, but it's a participation level. If it came down to 20K, came down to 16K, those mining costs, that's where I want to start building a position per se. So, I think if anybody got involved over the last couple of weeks when it was in the low 30s, you're happy you did. Understand that Tyson is right. Like, the volatility is going to be very high on cryptocurrency. What are you doing? Sorry, dude. My dog is killing me right now. The volatility is much higher in cryptocurrencies. They will stretch away like we saw back in 2018. What is nerve-wracking is, Tyson goes to the gym and everyone's talking about stocks and how much money they're making on stocks. You talk about, the Robinhood traders that are leveraging their little tiny accounts on call options that are just crushing it right now. It's amazing, but I hope for the sake of all those traders out there that are doing this and they're generating these crazy returns, is you find a way to do something with it. If you take, a $2,000 account and turn it into 20 or 100, please do something with that capital, because it's just as easy like that 20 or 100K turns to zero without anybody paying any attention, because you just think that you keep doing it. Or what creates those gains and that habit of like just going all in and kind of over leveraging and over margining, like stretching that little tiny accounts, like that's how you also give it all back. You can have an account go from 2 to 200 and you can give it all back thinking like, what's going on? The market's rigged. The market's wrong. It's like, this is what markets do. It's like we have pullbacks. We have different periods and phases where it's not all, buy and watch it go. It's like, call options have been probably, and this, you're like the options king here. But to just simply do like a call option. I'm not a big fan of call options unless I absolutely love the stock and I'm super confident that we're going to get some massive direction on it. Because if you're doing, simple call options or simple put options, you need a directional catalyst, and that's always difficult to time. And if you don't have the right time on it, you have your expiration too soon, you're overpaying on the premium for the option. You just don't make enough money with it. But look at the last 12 months. If anybody was aggressive on call options, it's so easy. And I hate saying that because we say easy, but there's an asterisk next to Tyson and I saying like it's easy, because it's easy now. But what's important is that it might be easy now to take advantage of, but you have to be protective. Like, you've got to be protecting. You've got to be taking profits. I thought one of the best articles I've read over the last month is just talking about the perspectives: short term, medium term, and long term. If you're short term, right now it's bullish. It's bullish. It's bullish. It's bullish. Path of least resistance is bullish. The markets are still completely pricing in optimism, pricing back getting back to normal, pricing in a $1.9 trillion stimulus package again. And this disconnect continues to happen, right? We have disconnect from reality, disconnect from the Wall Street, Main Street. But again, it's great to be in the markets. It's great to be a participant. And if you're financially illiterate, it's certainly time to get educated and get on the right path. So you know that when things are not as easy and not as simple and not as just foolproof, if you will, then that's when really you can preserve that capital. You can keep that money. You can keep that margin to work with, and you'll make good decisions. And when you really pay attention to the education, you can actually profit in a down market. You can markets going up, down, or sideways. You can find ways to also generate profits and returns that way too.
No, exactly. And you mentioned, I have to say something about the call option thing because
Hmm.
you're so right. There are so many boneheads out there that are going to lose a tremendous amount of money because they don't know what they're doing. And what they're doing is they're like, hey, I'm going to buy a stock that's $100 and I'm going to buy a 50-cent call option and it's going to turn into, $27 because that's the way it works. No, that's not the way it works. Professional options traders around the world take advantage of boneheads like that. Professional options traders want to pay the least amount of time premium as they possibly can. Paying for time is a novice bonehead idea.
Hmm.
Selling the time, being the insurance guy, being the Warren Buffett of options trading is what you should look to do. So I've got a trade that we'll talk about here in a little bit that where I'm using call options, but I'm doing it in a way that I want to be cheap on. I always try to be as cheap as I can. I want to buy lower, but I still want to participate today.
Right.
So that kind of sounds impossible. How do I buy a stock at a lower price but still participate today in most of the upside move? It
Yeah.
sounds kind of impossible, but it can happen as long as you know what you're doing. But as you said, I'm starting to see, and I think we're both starting to see, and I'm not saying that the time is done now, and I'm not saying that this is the end, but I am starting to see some cracks of euphoria.
Hmm.
And that's the one thing that's been really holding me back from getting super, super bearish is like, oh, I don't know if I see euphoria. Well, I see it now. Now, the one argument against the euphoria argument, I guess, would be, well, we got a bunch of money in the system. We do. But what happens? And so I don't think that the time is not now. So you're right. Short term, you just continue to do what has been working. But we've got to stay nimble and ready enough to participate when the light switches off and the party is over.
Hmm.
Man, there's going to be a massive, massive hangover, and it's going to be really bad. It's going to be a hangover so bad we're going to have to go to rehab on this one. It's going to be bad. But the light switch isn't off yet. But when it goes off, we've got to be prepared for that. So I'm starting to see a little bit of euphoria. Maybe it's justified with all this money coming into the system. So the question is this: can we continue to flood the system with money, or are we eventually going to have to fend for ourselves? I believe we're going to have to eventually fend for ourselves. And that's when things might not start getting as fun. We'll have a flush down and then reset new levels and then slowly build back up in a good way.
Hmm.
But, we could be 3, 6, 9 months away from that period, Chris.
Right.
Um, so what are some of the things as far as currencies? I'll go into some of my stock stuff here in a little bit, but as far as currencies go, what are some of the currencies that you have your eyes on today?
Well, it's hard for me to turn away from the dollar. So last week, let's use the dollar index as an example. So last week on Friday, the dollar's actually was pretty strong all last week. We're starting to see some really good turns. We're starting to get some nice trend line breaks. Here's the dollar index you can see on the charts here. So we turn the corner. We break a nice solid trend line in the U.S. dollar index. Starting to get back towards 11750. We got above that. This was potentially a. Let me get rid of this tool and use another one. I'm going to bring up a different drawing tool. The head and shoulders, it was just a really clean head and shoulders break to the upside. But, I've said this for years, patterns can get noisy around those major breakout points. And I feel like that's what the dollar index did last Friday. So we basically, if we want to zoom in on this, we had the head and shoulders looking like so. So we have our left shoulder, head to neckline. You can see that we came back and tested the neckline there, came back down to retest the shoulder, tested the neckline again, broke the neckline by a couple of days. We had like 1, 2, 3 days of bullishness. Last Friday, it was a bit of a reset button. So we're back down into that neckline area with a bit of an indecision candle today. Now, there's a couple things that can take place. This can still drop back into this right shoulder. This could even drop back into these previous lows. We could come all the way back down into new lows, and we could really upset every retail trader that's like, I thought the dollar was long. I thought you guys said the dollar was long. Look, I think the dollar is long. And I still like Aussie dollar short. I still like euro dollar short. I still like, if the pound dollar breaks a channel, it's great short. New Zealand dollar, like they're all dollar strength in my opinion. But I am building small positions because you know what? I have the dollar. It's got to prove that it wants to keep going higher. If we're going to come back to these lows, or maybe these, fresh lows, if we have oversold conditions and divergence, I'm still long in the dollar on the right side of the trend line. I'm still long at better prices on the dollar with major, 2016, 17, 18 levels of support. So I can't shy away from dollar crosses because I think the positioning overall for the next 1 to 3 months to me still favors dollar strength. Now, outside of the dollar, I honestly like my favorite setup. I think I talked about it last week with you and Gary. I think Aussie New Zealand might be one of my favorites, but I'm going to switch it up this week because Aussie New Zealand is now going my way. I'm in around 106.50 on a couple of small trades, and I'm looking to get back towards 107.75 or 108.00 in the near term. Now, as everyone's looking at this chart, we just broke this recent low right here on the Aussie New Zealand. So we might be seeing this as another kind of sub pattern to continue to go lower on the Aussie New Zealand. And I'm okay with that. If it goes lower, you can see my positions lined up. I have buy levels right here to buy very small. And I will get myself into these major zero levels like 104, 103, 102, and I'm going to take this all the way back up towards 108 and hopefully 110 for a big position profit chunk. So right now, like I am liking the positioning on Aussie New Zealand. If it goes to the downside, I know how to position those buy trades. If it comes up and retests 10800, I'm going to protect in the short term. So that's one of my favorites right now. To pair this, I'll throw in two more for you, Tyson, and I'll give you the microphone since I haven't stopped breathing in 2 minutes. New Zealand CAD. New Zealand CAD, this one is setting up one of two patterns. To me, this is either a head and shoulders pattern, which would be a left shoulder, head to neckline, right shoulder. And if we can see the hesitation in this area, our right shoulder, we're starting to look for price to break this neckline and head down into this yellow box. There's nice pocket levels down here. There's harmonics on the daily and weekly chart, all suggesting some bearishness. What's interesting is, New Zealand has been very strong. If we take a look at, say, the currency strength chart for today, the Aussie and New Zealand were just skyrocketing as the dollar was softer. So every time the dollar takes these plunges or gets, if the dollar was strong like it was last week until Friday, as the dollar's been strong, the Aussie and the New Zealand have both been weak. As the dollar's been weak, the Aussie and the New Zealand has both been strong. So it really is still showing that same game of risk on versus risk off trading. So I think New Zealand CAD, I love the technicals with the weekly harmonics. I think an interesting story here, Tyson, is oil. Like oil's at like $58, man. I mean, we have levels up to like $64 before oil's like hitting tons and tons of resistance. So, we might see oil continue to stretch, and it looks like honestly right now we might see we could be looking for like a capitulation type move on oil because we now have like 5 daily candles in a row that we have just broken higher. Like it right there. I mean, right back to 53 and change. And then 1, 2, 3, 4, 5 bullish days in a row. I think this could be that kind of this last ditch run up where oil runs up, hits major resistance, and then oil ends up falling back down into, let's say the low 50s. Let's say we end up getting a topping pattern on oil and we go range bound from 60 to 40. I've still said that for the last, 6 to 8 months is oil's probably going to find some type of fair market equilibrium. And I think between, $50 and $60 or $40 and $60, those are going to be your big like supply and demand cycles in oil, in my opinion.
Yep. No, I agree 100% with everything you're saying. And actually, it leads me to one of my favorite currencies that I liked the short in the euro dollar. However, on the flip side, I like the long in the euro New Zealand, which leaves me to the New Zealand dollar. And you think about it, you're looking at a short potentially in the New Zealand CAD, and
Mm-hmm.
you're also looking at potential weakness in the oil. Now, this is all going to wrap back to the one position. So I'm looking for weakness versus the euro, or weakness in the euro versus the dollar.
Yep.
I'm looking for strength in the euro versus the New Zealand. So that leaves me with the New Zealand dollar. Chris just showed that New Zealand could get weak against the CAD, and the CAD's very correlated to oil. Well, wait a minute. If oil sells off, then that means dollar should rally against the CAD. That wraps me back to New Zealand dollar, maybe one of the best places to position. So actually, I'm looking at a trade here, Chris, and I just set this up while you were talking. I like the idea of waiting for that confirmation because again, I don't want to try to get in front of this. But what do you think about this? marking last week's low price. So about 71.35 was last week's low price. If we can get like a 4-hour close below last week's low and put a stop above this last swing high right around 73.15. So, it's decent size risk. We'd have, right around 175 pips or so of risk. But I think if we can get a close below last week's low, that could be the move to take us back down to those levels of support or those levels of resistance right down towards that 68 level. What do you
Yeah.
think of that trade?
I think that's great. In fact, I do have Price Action Pro. We set up last week in the trading room with a confirmed break below 7,100. So you're
Yeah.
looking a bit higher, which is totally fine because that's last week's candle. I see the same thing. Like you can see that this low right here is 70.95. The week before that, 71.05. So I'm telling the robot to close below 7,100 on a daily chart. And what I'm looking for is if we close below this, close below 71 is to add some extra continuation trades. If price continues to go our way, I think we have, pretty much freedom and open space to run down to 68. So it's probably an aggressive 300 pip target. What will be interesting, Tyson, is, we've seen the Aussie drop from like, 70, what is it, 7,300 or so down to around 71 ish. And it did it in like a very slow way. And you watch the New Zealand dollar, it's like we just kind of dropped and stalled right there. So I mean, we might come back and retest the high and then come back down to 71. But I think the level you're talking about is perfect. Like it just has to show us. It just has to prove that it's time to go. You know,
Yeah, and
I
I
think
like
this is a
that.
good
I like
trade.
67 as a target because
Yeah,
that's kind of right between that 67 or even 66, 67 level is kind of a defined demand area breakout level. There's also some pockets sitting there where it's like that's most likely when we start to break the structure to the downside, that's going to be kind of a magnetic area where price wants to go and visit again.
definitely.
And the Bears are actually willing to give that level up because they know there's still bullish structure that they can kind of justify saying, okay, we'll give this little bit room to you and still maintain kind of some bullish structure. And I think the big battle, I think you're right. We could consolidate a little bit. This move could start off slower,
Hmm.
but then I think we could wake up one of the days and be shocked that we get a 200 pip move in our direction pretty quick,
Right.
get down to that 67 level, 66 level, and in there it's going to consolidate again. And that's going to tell me what the next 500 to 1,000 pip move is going to be. Between
Right.
that 60 and 65 level is going to tell me really, I think, where we're going to go probably for the rest of the year. Even though it's still early on, that could tell me maybe not the rest of the year, but that's probably going to tell me where we're going to go for the next few months or so. So I really like the New Zealand dollar. And I think, honestly, you can really kind of plot out the same exact pattern on all the dollar pairs.
Yep.
It doesn't
I
matter
agree.
what it is. They're all looking very similar. I mean, the pound dollar, the euro dollar, the New Zealand dollar, Aussie dollar all look like that on the downside. You got the dollar Swiss. The only one that I'm a little bit on the sidelines for that I'm not 100% sure on, that I'm kind of staying away from at this point, is the dollar yen.
Right.
I love trading the yen pairs. I'm just not a huge fan of trading a risk off pair like the dollar versus a major risk off pair like the yen. So, especially in this environment, so I'm kind of avoiding the dollar yen, but the dollar CAD looks pretty bullish to me.
Hmm.
And so I think you could do the same type of pattern and play in all of the dollar pairs. And I think you're going to be good. And when that happens, that could be kind of the signal. If we get this, sustained move in the dollar, this bullish reaction in the dollar, that could be a little bit of a signal of some profit taking within the stock market.
Right.
We're obviously not seeing it yet, but
Right.
it's just a matter of time. You got to think, when are we going to run out of buyers? When are we going to run out of buyers buying the market? When are we going to run out of sellers selling the dollar? And obviously, it's not yet, but
Hmm.
it's going to be coming. And I want traders hopefully to be prepared, because you mentioned something too about like the GameStop move, right?
Right.
Think about how many traders thought that they were kings of trading
Right.
2 weeks ago, and then last week they were humbled. A lot of these traders were absolutely crushed,
Right. Well,
and
left holding it at,
they just
they're holding
they
it
just
at
got a
two.
really big, important lesson in
Yeah.
trading and having realistic expectations.
Yeah. I mean, you're talking about traders that were clearly left holding the bag around $200+ on GameStop. More than likely $200, maybe $100, but you're upside down, well over 50%. Maybe, I mean, it's like it's crushing to be like, come on, GameStop, come on, Wall Street bets, let's go. It's like you're crushed. I mean,
And you know
and
what?
it,
I've got a feeling they think it's going to get back up there,
I
and they
know,
have no clue what
I know,
valuation,
yep,
metrics are, and
I know,
it's like, what are you doing? I
yep,
don't know. Anyway, I mean, I had so many people like, oh man, this is so fun, and it's like, guys, you don't understand. Like, okay, the little guy can beat the big guy every once in a while.
Yep.
You're not going to win long term.
Yep.
I'm sorry. Like, we live in a world where it's not going to happen long term.
Yep.
And especially like GameStop. I said this last week. We're talking about a stock that's $10 billion, guys.
That
You
market
try
cap
to
is
do this on
nothing.
Apple.
Yeah.
That's a $2.4 trillion company. You won't do it. It's
Right.
like a little drop in the drop. I
Yep.
mean, it's fun to watch, but in the grand scheme of things, it doesn't really mean anything. It spooked the market. It was enough to spook the market
Yep.
because these hedge funds, they know they control everything, but they still want to make sure that public perception is good. And they were worried about public perception of being a little bit kind of deteriorating a little bit, which means that maybe the public wasn't going to supply as much into the market. So that's why the market sold off a little bit. It wasn't because GameStop was like, oh man, GameStop's destroying the market. No, it was because these funds are smart enough to say, "Ooh, man, people might actually pull back on their 401k allocations. People
Right.
might actually pull back on some of these things now." And so it's important to understand the psychology of the markets also. So, hey, Chris, I got a stock trade I want to talk about. You mind if I talk about that?
Yeah, let's do that. And then I want to get to, I think Solomon asked a question, New Zealand yen and dollar yen. So we'll sprinkle those in
Yeah,
as
let's
well for
finish
some
up on the
currencies.
currencies, and then I'll
Okay.
talk about the stock trade. Yeah.
So New Zealand yen, I'm just going to take a look at the daily chart and just look left. I mean, I've been watching this channel. So here's what we did in the trading room. We were watching this range for most of last year. We had our, giant drop in March. We were pretty much long everything risk on from April and May onward. That trend continued. We had some consolidation. We traded the ranges. We took the breakout. We had some nice profits up from 72 to 74. As it continues to stretch a little bit higher, I think someone's asking, do you expect 80 or so within the next 5 weeks? My answer to that is, I mean, we're at 7,600. Is it going to stretch another 400 pips without having? I mean, look, in my opinion, here's how it gets there. If we have, and this is what I'm interested in, like this stretch to the upside, it to me is like we're already overextended. We're already like testing overbought conditions. We're showing divergence from recent highs, but this is what happens. What we'll see is the market will stretch and stretch and stretch and stretch and stretch and stretch, and we might look at a better trend line here and then see a decent correction actually take place. But if it stays within the context of this channel, then I'm not interested in like position trading this. I feel like right now the trajectory is bullish. And do I want to be long on New Zealand yen? I mean, maybe within the channel. Like this was a good opportunity to get long. If we score a point for those bulls and pull back to the channel, we can look at another chance to buy low until the structure changes. So, I mean, if it's in a channel, it's clearly bullish right now. I hate the fact that it's overstretched. I hate the fact that it looks like it's overbought, but I'm not calling the top in this currency pair, and so could it stretch another 400 pips? Maybe, but I don't see it happening in like a violent way. If it does get like really ridiculously fastly overstretched, like if we go essentially straight up to 80, then my thoughts are I'm going to short whatever I can get at the top. Like if I see it go to 80, 80, 50, 80, 100, I'm looking at aggressive trend lines. I'm looking to try to short that from, just this the standpoint of like inefficiencies. I mean, when we see it's going, and then very vertical move, a lot of times when that vertical move starts to stall and put in tops, in the Forex market especially, we tend to see some really violent corrections, and that's what helps us put in a lot of those really strong tops and bottoms. So dollar yen, I think the same person was asking, further downside in the dollar yen for the next 5 weeks. Honestly, the yen pairs are a little bit squirrely to me because dollar yen, we had a really easy breakout around 10400 and the dollar yen stretched up into 105. Now, my thoughts are we broke the channel. I think that a really critical level is right around 105. If we stay above 105, I think that this dollar yen can still climb its way up towards 109. But the dollar yen is confusing because we typically have dollar and yen moving at the same pace. Like they're both strong, they're both weak, and it's really difficult to get the separation. So I think dollar yen is probably easier just to stay out of and then trade the, Aussie yen is going to be a good candidate for risk on and risk off. New Zealand yen is a good candidate for risk on, risk off. And that way you get the better extremes. If it's a risk on, you're going to see strong Aussie, strong New Zealand, and a weaker yen. You'll get more movement out of those currency pairs. If it's risk off, you'll see Aussie yen dropping, New Zealand yen dropping, and you get more of the extreme of, the Aussie, New Zealand will be weaker and the JPY will be stronger. So I think those are better pairs to play as far as, risk on, risk off trading. So dollar yen, because they're kind of one and the same, I don't like the dollar yen because it's difficult to figure out where it wants to go from here.
Yeah. So I agree 100%. I would be willing to reluctantly buy. I'm not going to touch the dollar yen for the same exact reasons why Chris just laid out. It's just I'm bullish on the dollar, and I think we're starting to see 2 weeks ago, maybe not right now, maybe not last week, but 2 weeks ago did some structural damage for the bears on the dollar. So I got to pay attention to that. So I'm going to not touch the dollar yet at this point.
Mm-hmm.
New Zealand dollar, I would reluctantly buy up to about 77.50. We've got
Okay.
some major supply, major areas right around that 70, between 77.50 and 80. That is going to be really difficult. So if I'm going to buy, I would do exactly what Chris did. Make sure you're picking your spots. You're not buying high. Don't buy breakouts.
Right.
Buying the pullbacks down to a nice level of support, and then kind of pick your moves on the upside. Don't look for a huge move up. Just kind of pick your spots. Once it gets to 77.50, if we get there, and then if it starts to break structure to the downside, I'm going to jump on the shorts
Right.
for sure.
Yep.
Once we get to 77.50, that's going to be tough to get through that 77.50 to 80 level. I can almost promise it's not going to just blow through that level. Not to say we can't get through it long term, because we can, but we're probably going to see at least a dip back down to 74 to 75 before we break through that level. And so in that 77.50 to 80 level, I would absolutely look to be a seller.
Yep. I like it. That's
Yep.
perfect. All right, Tyson, let's talk stocks, man. What do you got for everybody today?
Yeah, so these are two positions. I've got pretty large size in both of these positions. First one is if you want to pull it up, it's BTWN. It's called Bridgetown Holdings. This one's a little bit more, it's not even that speculative to me. It's a SPAC. You and I talked, I don't know, 9-10 months ago about these SPAC plays and how I said I think these SPAC plays are similar to what we saw in 2017 in cryptos, and it's played out to that. Now, this is eventually going to end. This boom time is eventually going to end with these SPACs and stuff. But for now, we still can ride the waves. So this is a play that BTWN is a play that I like a lot. It's Bridgetown Holdings, and it's a blank check company. It has not found a target yet. However, I love the management team. It's ran by Peter Thiel. Peter Thiel doesn't fail. He is literally like he's the golden boy. He's had his hand in Tesla. He's had his hand in Facebook. He's had his hand in so many like unicorn of unicorns. And the rumor is they're targeting a company called Tokopedia, which is the Amazon of Indonesia. Now it's not a done deal yet. But whether it's them or someplace else, it's more of a bet on the management, bet on Peter Thiel getting this deal done and doing it in a really good job. So here's how I'm going to do it. As always, I don't want to go out there and just buy the stock right now that's sitting at $15.95, or let's say $16. I always ask myself, how can I buy lower, right? And so this is what I'm doing, and this is a current position that I am in. I went out to April, because by April, I expect them to have the announcement. So this is a play not based upon the merger. They might not merge until May or June, but I expect them to announce their target before April. So if they announce their target, I expect a nice boom in the stock.
Okay.
So what I'm going to do is I'm going to buy the April $10 call. And at the same time, I'm going to do what's called a bull call spread. I'm going to buy the April $10 call, and that's trading for about $6.05. So I'm really only paying like 10 cents in time in that, which is exactly what a professional options trader wants to do. At the same time, I'm going to sell the April $30 call. So I'm basically saying my upside is all the way to $30. So I could make the difference in the spread. So I'm buying the 10, selling the 20, or selling the 30. I can make up to $20 in the contract.
Okay.
That right now is trading for about $5.25.
Nice.
So what that does for me is that allows me to, so let's say I bought this and I held it all the way to expiration. Well, if the stock is at $16 at the time of expiration, well, I bought it at $5.25. It's worth $6. So if the stock goes nowhere, I make 75 cents on a $5.25 position. So I make money if it goes nowhere.
Right.
The stock can go down 5 to 6%, and I still make money if I held it all the way to expiration.
Right.
Now, I have an upside all the way to $30, but I'm not going to trade it all the way up there. My target on this spread is going to be, I'm going to look for a target of $15.75. So what I need the stock to be at about $25 to $26 for it to hit that target. Now, you might be like, Tyson, you're out of your mind. To go from $16 to $26 in 2 months, that's not going to happen. Well, in the SPAC world with events, it can happen. But you got to remember, I don't care whether it happens or not. If it's at $16, I make 75 cents. Let's do the math on that, Chris. 75 cents on a $5.25 position. The stock goes nowhere. I make, what is that? 75 cents divided by 525.
Yeah, I've got you 14.2%. Yeah.
Yeah, so 14.2% if the stock goes nowhere.
Right.
And I have all the upside all the way basically. So it's a 3-to-1 risk versus reward trade. And the only way that I actually lose all the money, so it's not even a 3-to-1, because the only way I lose all the money is if it's below $10.
Right.
Guys, it's not going to go below $10 because the SPAC liquidating value is like $10.80. So it's not even going to go below $10. So anyway, so that's one that I absolutely love. Buy the $10, sell the $30. That's a way that professional options traders use call options to get in and get into a stock they want to own for cheaper and still participate on the upside. So I'm making money up, down, or sideways, and I'm allocating less money, which means I risk less to make more. And that's exactly what we're trying to do. Another one that I love that I've been talking about for a couple of weeks is GIX, which is GIX, which is Gig Capital 3, GIX. And it's merging with, this is a long-term play, guys. This is one of those stocks that I think this could be a $200, $300 stock in the next 3 to 5 years. It's sitting at $15 or right under $15 right now. It's merging with a company called Lightning E-Motors. It is the leader in think garbage trucks, think city buses, think school buses, metro transit vehicles, electric. And what they do is they do a couple different things. They retrofit them, and then they also build them out completely from scratch. They already have products out there running. I love the company. I think it's a long-term play. The way that I want to buy it right now, they're looking to merge before April. So they're looking before April. So what you can do is you can go to the April contract, buy the $10 April call, sell the $25 April call, create that bull call spread. And the trade right now costs about $3.80. Anything under $4, I think, is a steal. My target on this trade is going to be right around $11 to $11 to $12. And I think there's a very, very good chance. Now, again, the stock goes nowhere. It's trading at about $14.90 right now. If I get in for 380, my 380 goes to 14.90 if the stock goes nowhere. So I still make money. It's a good percentage. Stock goes up, I make money all the way up to $25. The only time I lose money is if the stock is like 5 to 6% below where it is today. So again, the idea is I make money up, down, or sideways, and I'm risking less to make more. That's the way professional options traders actually trade options.
Very nice. Nice. So did you? I think you said GIX, but I think it was GIK, right?
Oh yeah, GIK. I'm sorry.
Yeah.
Yes, GIK.
Okay. Yep. Because I remember we had talked about that.
Too, but yeah. GIK is the one that GIX I think is merging with some other company. GIK is the one I like.
Okay. Yep. So we got GIK, and again, these are both. It's interesting. These are both SPAC plays. I know you've been really heavy into SPAC plays, but blank checks, and this is the kind of the easy man's IPO. I mean, it takes SPACs maybe 3 to 5 months to go and merge and have these mergings go public versus an IPO traditionally takes like 13 to 16 months. So this has been a much sexier play as far as getting companies out there, having a ton of money and capital behind it. I mean, we've had some great success in these SPACs, Tyson. Going back to Kensington Capital and SPAQ, merging with Fisker, and we've had the Skills one as well. The Skills was a great one.
That thing's at like 40, 44, 45.
Is it really?
Now.
Man, that's awesome, dude.
Think about this. We called out Kensington Capital when that was like $15. That went up to like 100 plus.
Yep.
We called out Skills when it was at like 14, 15. That's at like 44 right now.
Yep.
The one that is underperformed that I still like long term is Fisker. I still like that long term.
FSR,
what I look for now going forward is I look for two things. One, they either have to have a stellar management team like BTWN with Peter Thiel. I mean, Peter Thiel's. Do some research on Peter Thiel. You realize this guy is like the man amongst men. I mean, he's awesome. And then number two, if they don't have a great management team, I kind of want them to always have a great management team, but they have to have a target that is not pre-revenue. I want them to actually have a nice growth story and has a product out there already that's generating some revenue.
Right. Yep. Nice. Yep. What can you actually give some people out there, like where are you following a lot of these SPACs? I know that I've been on like SPAC Insider and SPAC Track. Like, what are you using to kind of like follow a lot of these SPAC news, and who are they merging with, and where do you get the kind of the due diligence for these SPACs?
Yeah, it's interesting. I don't have the best resources other than it's just takes from my experience. What I try to do is I try to figure out what the whisper is out there, what people are talking about, and then I go to YouTube and I do Google searches and stuff. And the way where I'm getting most of my whispers from on,
Hmm.
hey, check this one out, look at this, and here's the ticker symbol for this, is stock twits.
Yeah.
And basically, anytime somebody posts something on stock twits, so I follow, if you go to StockTwits and you add to your watch list, GIK and BWTN and some of these other SPACs. Well, within that group, they'll talk about other plays. So anytime I hear somebody mention some other play, I'll add that to my watch list and then I'll go
Right.
do some research on it.
Right.
And a lot of them, some of them are junk. Some of them are like, I'm not going to deal with that one. But I'll add all the SPACs to my watch list and I'll learn a little bit more about them just by doing normal research on you. There's a lot of good YouTube stuff out there.
Hmm.
I don't go to the YouTube to try to get trading ideas. I go to the YouTube to get more analyst type of coverage on what does the company do, who are they merging with,
Yeah.
and so it starts typically with stock twits, which is good. But you can go down a rabbit hole of stock twits too. Don't use stock twits as like a trading call service and think you're going to meet the next amazing trader on there. No, you're going to meet the GameStop bonehead on there. Just use it as a place to kind of make you alert of
Hmm.
some of these plays, and then go do your own research. That's the best advice.
Nice. Okay. Yep, I agree. Okay, cool. Yeah, those are two great plays, man. I'm gonna actually jump into some
Real
options and
quick, there's
play
a
those two.
question about Lucid Motors. So I think Lucid is interesting. What I don't like about Lucid, I've missed the move. I think it's an amazing, beautiful looking car. I just don't like the market for a $170,000 vehicle. I know they have another car coming out that's like $70,000 in next year or the year after, but I think a Fisker that has a $40,000 vehicle is gonna eat the lunch of a $170,000 vehicle. So long term, I would much rather be invested in a Fisker than a
Hmm.
Lucid.
Yeah, I would agree. I mean, especially making so. I don't know if anyone caught the GM Super Bowl commercial. It was Will Ferrell, big deal from GM to post like GM's going after Norway, right? Like the one country in the world that had more than 50% of their car sales last year were EVs. Now, the reason they did that is because the cars are heavily taxed. Like if you own a vehicle in Norway, it's obviously much smaller area than the U.S. and a ton of other countries around the world, but it's a huge premium, a huge tax on owning vehicles. So they made that tax exempt for electric vehicles. So there was an incentive to anyone that wanting to buy an electric vehicle. So take that into the U.S. and produce it to a U.S. like consumer scale. You know, GM trying to be carbon neutral or making EV cars by 2035. I mean, right now we know that electric vehicles are way more expensive than non-electric vehicles. And, we're starting to just get into, okay, we've got to have this big initiative for like Recharge America, right? We've got to have charging stations so that you can actually take a road trip and know that you can go to the gas station and charge your vehicle versus being stranded for 2 to 5 hours somewhere. You need to have like, the hybrid for right now that can get you on a 5 to 600 mile range versus just a solely electric vehicle that's going to go 200 miles. So there's still a long ways to go for these cars to meet, but I'd say the biggest incentive would to be, like Tyson said, have that $30,000 to $40,000 electric vehicle to give people an option and have it not look like a Prius, like have it be a decent looking car and people will buy it. I mean, clearly the demand is there right now, but I mean, again, change the body type so it doesn't look like it's
Yeah.
completely out of the normal. It's like it can look like a normal car, look presentable, and actually be functional. So I think
Here's
that's
my
what's coming.
Yeah, I agree. Here's my total speculation, but actually I think with an amazing upside EV portfolio that I think
Yeah.
is a great EV portfolio. It's one of the names is going to surprise you, but it would have Fisker for the consumer automobile. It would have GIK for the mid-level commercial vehicles. It would have Romeo batteries for the battery play, and it would have Nikola for the semi play. I think a lot of the bad news, the horrible, this is a scam. It's not. They're actually making a vehicle. They have a couple of their prototypes done now. Now, again, are they going to actually become what they thought they could become? I don't know. But at the current valuation with $1 billion in cash that they're sitting on, I think it's worth a shot sitting at $23. So Nikola, Fisker, GIK, and RMO would be my speculation EV portfolio.
Nice. So
Yep.
quickly on that, would you throw in like a Tesla and an NIO like the Neo and
For
the
sure. I
Tesla
think
in.
a Tesla is not a speculation. Tesla's
Yeah.
a volatile
Yeah.
EV play,
Yep.
but it's not a spec. Tesla's going to win.
Right.
Tesla is the Apple of EV, and not just EV, but I think Tesla is the Apple, the Google, the Amazon of the world transportation and where we're moving in the world. I think Tesla's an amazing stock for the next 20, 30 years. However, it's going to be super volatile. I mean, it
Agreed.
could lose 50%. Same thing with this speculation portfolio.
Yep.
I think Tesla could be a 5-banger in the next 10 years. I think the portfolio that I just said could be a 20-banger, if that
Awesome.
makes sense.
Yeah, I mean that's so cool. So I mean, look, man, we've covered some forex, we've covered some stocks. Traders out there, like, look, pay attention to this stuff, because give this 3 months to 6 months to 12 months. We're gonna circle back and be like, hey, remember in February when we talked about this EV portfolio before anybody else is really making this mainstream? Because eventually, Tyson, you're gonna see this out there where people are selling this information, and it's gonna be, subscribe to this and the next big EV portfolio. It's like we're doing it right here for you free. So pay attention to this stuff. Again, do your own research, do your own due diligence. But I think this is a great way to start. Certainly start off your week with AAA. Any final words for today, Tyson? We've gone a little bit long, but we had a blast today as usual. Any final words?
No final words other than, listen, the biggest takeaway is like Chris said, pay attention. This business can be easy, but it takes time. And the only way that you can accelerate the time that you need to spend in this business is to learn from those who have already been through it. So join us, learn from us. Don't skimp on your education. Yes, education costs money. Doesn't always cost money. We're giving a lot of really good education right now, but real advanced education does cost money. But I know it's all worth it when it's all said and done, if we can help you get to ultimately where you want to get to. Just this is too important to do willy-nilly.
Yeah.
And just to try to do. You guys could end up doing really well if you do it right. So join us, be with us, be around us more often, and make sure if you're going to do this, do it right.
Yep, I agree. And I'll do the shameless plug for the YouTube algorithm. If you want to hit that like button, click the thumbs up. We appreciate it. All the comments you leave us, all the likes we get on the video, help this make its way up towards YouTube so more people can see this. Subscribe to the channel, click the notification bell, all that stuff, so you can see us do this every week. Next week we'll be at it again. Most likely be the three of us: Gary, Tyson, myself. That's it. Have a great Monday. Have a great time in the trading rooms this week. Let's make some pips. Let's make some profits.